What's up, stock warriors? Welcome back to the Market Pulse channel. Hope you're all crushing it out there in these wild markets. Important disclaimer, before we get started, remember that this video is purely educational. I'm sharing technical analysis and market observations, not giving financial advice. All investments carry risk, and what works in one market environment might not work in another. Always conduct your own research, consider your personal financial situation, and consult with a licensed financial advisor before making any investment decisions. Your financial future is ultimately in your hands, so invest wisely. Before we dive into these incredible charts, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss our latest analysis. And for those who want premium content, early access, and personalized trade alerts, check out our exclusive Discord community with the link in the description. Now let's get into this technical breakdown. Dell is showing a clear downtrend pattern right now, currently trading at $96.22 with a modest 0.45% gain on the day. What's immediately obvious is that blue descending trend line, classic bearish technical signal, with price action consistently making lower highs since late 2024. The stock is trading well below its 150-day SMA of $108.89, another bearish indicator. However, what makes this setup interesting is the potential bottoming action we're seeing. After hitting lows around $72 in March, Dell has been establishing a base and slowly grinding higher. Key resistance sits at that $100 psychological level, with stronger overhead resistance at the descending trend line around $115. Support has formed at $92 to $94, and a break below could send it back to retest the March lows. What's driving Dell's recent performance? The company reported strong fiscal 2025 results with full-year revenue of $95.6 billion, showing growth particularly in its infrastructure solutions group, up 22%. Dell's AI-focused server business has been booming, with the company shipping $10 billion worth of AI-optimized servers in fiscal 2025. For traders, this presents a classic wait-and-see setup. Either wait for confirmation of a trend reversal with a break above the descending trend line, or play the continued downtrend with tight stops above recent resistance. Talk about a chart on fire. AppLovin is currently trading at $339.51, up a massive 11.88% today alone. The technical pattern here is textbook bullish, a clear ascending channel with price respecting both the upper and lower boundaries. After bottoming around $210 in March, APP has exploded upward, recently breaking above its 150-day SMA of $292.92. The most bullish signal here is the volume profile. Notice how volume has been increasing with price, confirming real buying pressure behind this move. Support now sits at the 150-day SMA, with stronger support at the lower channel boundary around $280. Immediate resistance is at the recent high of $370, with the upper channel boundary extending to around $400. The fundamental story supporting this technical strength is impressive. AppLovin recently reported Q1 2025 earnings that beat expectations, with EPS at $1.67 versus the $1.45 estimate. The company has also announced a deal to sell its mobile gaming business to Triple Dot Studios for $400 million in cash, plus a 20% ownership stake. This allows AppLovin to focus on its booming advertising technology business, which saw revenue surge 73% in Q4 2024. For traders, pullbacks to the middle of the channel or the 150-day SMA could present buying opportunities, with stops placed below the lower channel boundary. Palantir's chart is showing monster momentum, trading at $119.15 with a 7.85% gain today. This stock has been on an absolute tear, more than doubling in value in 2025 already. The technical pattern here is a classic breakout and retest. After consolidating between $85 to $100 for several weeks, PLTR decisively broke above resistance at $100, retested it as support, and has now continued its upward march. The stock is trading well above its 150-day SMA of $77.67, showing exceptional strength. Support now sits at the previous resistance zone of $99 to $100, with stronger support at the rising trend line around $95. Overhead resistance is minimal given the new all-time highs, though round numbers like $125 and $150 could act as psychological barriers. What's driving this incredible run? Palantir recently reported Q1 2025 2025 earnings that met expectations with EPS of 0.13, but more importantly, revealed explosive growth in government contracts. U.S. revenue surged 55% year over year, with U.S. commercial revenue up a staggering 71%. The company also raised its full-year 2025 revenue guidance to between $3.89 to $3.90 billion. For traders, this is a momentum play, but be cautious. The stock is now experiencing extreme valuation with a PE ratio over 520. Consider trailing stops to lock in gains while riding the momentum higher. The QQQ, which tracks the NASDAQ 100 index, is currently trading at $488.29. This chart shows a recovery in progress after a significant correction. From a technical perspective, QQQ is testing its 150-day SMA of $497.84 from below, a critical juncture that will determine the medium-term direction. The ETF experienced a sharp decline from its peak, near $540 in March, to lows around $410 in April, but has since recovered about 60% of those losses. Support now sits at the recent consolidation area around $460, with stronger support at $440. Overhead resistance is at the 150-day simple moving average, $497.84, followed by the February high around $520. The recent performance reflects the broader tech sector's volatility in 2025. After a strong Q1 earnings season where tech giants largely beat expectations, concerns about inflation and interest rates led to profit taking. However, the sector has begun recovering as market participants anticipate future growth, particularly from AI-related technologies. According to analysts, full-year NASDAQ 100 earnings growth projections stand at nearly 22% for 2025, indicating strong underlying fundamentals despite the recent volatility. For traders, a successful break above the 150-day SMA could signal a resumption of the long-term uptrend, while a rejection could lead to a retest of support levels. The S&P 500 index is trading at $5,663.95, showing impressive resilience after the recent market volatility. The technical picture reveals a market in recovery mode working to reclaim its longer-term uptrend. The index is currently trading below its 150-day SMA of $5,817.56, but has bounced significantly from its April lows near $4,800. Notice the two key gaps on the chart, one around $5,350 and another near $5,600. These unfilled gaps could serve as important price magnets in the coming weeks. Support sits at the recent consolidation area around $5,600, with stronger support at $5,400. Resistance is at the 150-day simple moving average, followed by the previous all-time high around $6,100. The S&P 500's performance in 2025 has been influenced by several factors. Continued earnings growth, expected to accelerate to 11.2% in Q1 and 12.5% in Q2. Concerns about inflation and interest rates, and uncertainty surrounding potential tariffs under the Trump administration. Wall Street analysts have mixed opinions on the index's year-end target, with forecasts ranging from 5,800 to 7,100. The average projection sits around 6,600, representing roughly 15% upside from current levels. This suggests more modest gains compared to the exceptional performance of the past 2 years, where the index gained approximately 24% in both 2023 and 2024. For traders, this presents an intriguing setup with the index at a critical technical juncture, either confirming a continued uptrend by breaking above the 150-day SMA or potentially retesting support levels if economic data disappoints. These 5 charts tell us a fascinating story about the current market environment: mixed momentum. While some stocks like APP and PLTR are showing extraordinary strength, others like Dell are still working through corrections. Sector divergence. Not all tech is moving in the same direction, a sign of a more discerning market that's rewarding companies with AI exposure and strong earnings growth. Critical technical junctures. Many of these charts are at key technical levels, testing SMAs, trend lines, or previous support or resistance that will determine the next major move. Volatility remains elevated. The sharp moves we're seeing indicate that volatility remains higher than historical norms, requiring traders to use appropriate position sizing and risk management. As we navigate through the remainder of 2025, keep a close eye on how these stocks react to key technical levels, earnings reports, and macroeconomic data. The market is giving us clues. We just need to listen. If you found value in today's breakdown, you know what to do. Smash that like button, subscribe, and join our Discord community through the Patreon link below. We're building the strongest trading community out there.